China's renewed crackdown on the cryptocurrency industry has wiped off around $400 billion in value from the total digital currency market since Friday, when a major Bitcoin mining hub ordered miners to shut down operations. Bitcoin was down more than 8% in the last 24 hours, trading at $29,791, at around 8:40 a.m. Eastern Time on Tuesday. It broke below $30,000 for the first time since January 27, according to CoinDesk data. Other cryptocurrencies including Ether and XRP were also sharply lower. Mining ban, PBOC warning. On Friday, authorities in China's Sichuan province ordered cryptocurrency miners to shut down their operations, according to multiple media reports. Sichuan is one of the biggest Bitcoin mining centers in China. Many Bitcoin mines in the southwestern Chinese province were closed as of Sunday, according to state-backed tabloid The Global Times. The move in Sichuan comes after other mining-intensive provinces in China, including Inner Mongolia, also shut down crypto mining. In May, Beijing called for a crackdown on Bitcoin mining, highlighting how the order has trickled down from the top. Then on Monday, the People's Bank of China said it spoke to Alipay, the payment service run by Alibaba affiliate Ant Group, and some major financial institutions. The central bank said it urged them not to provide services related to cryptocurrency activities, including account openings or clearing and settlement. These are not new rules, but the PBOC's comments show how China's top regulators are stepping up monitoring and pressure on financial institutions related to cryptocurrencies. China banned local cryptocurrency exchanges in 2017, forcing them to move offshore. That did not stop Chinese traders from buying and selling digital coins, though it added a layer of complexity to crypto trading. Chinese traders would have to move their Chinese yuan to a platform to buy crypto. That would be done via a payment service like Alipay or a bank account. So the PBOC's latest reminder to financial institutions could be looking to stamp this out further. Since Friday, when the Sichuan authorities notified miners to shut down operations, Bitcoin is down around 16%. The central bank notice added further pressure. China's got the Bitcoin bug. A real estate developer in Shanghai just announced that it's now accepting Bitcoins for one of its mid-range flats in a posh Shanghai suburb. That's after a unit of Baidu, China's leading search engine, announced it would accept Bitcoins in mid-October. Half of the world's daily Bitcoin trading volume now comes from China, according to Genesis Block, a research firm that follows Bitcoin. That's a trend we called back in April. Moves in the yuan-Bitcoin exchange rate are now a leading indicator of dollar Bitcoin price spikes, reports the Genesis Block. Will Shanghai real estate sales whip up China's Bitcoin trading frenzy even more? Hard to say. It's not clear whether the developer's announcement is a marketing gimmick or a real expansion of Bitcoin's practical value. Even the company's president isn't sure. One reason we're doing this is to show that our development isn't like traditional real estate companies. It has the internet in its genes, He Dashang, Shanda Tiandi's president, told First Financial Daily, linked in Chinese. Shanda Tiandi appears to be affiliated with Shanda Games, one of China's big online games companies. The second reason is that we want to test out Bitcoins as an actual payment method, to see if this thing is really feasible, he said. The target market for the development, the name of which roughly translates to, amidst heavenly youthfulness, is young tech-y entrepreneurs in need of either a home or an office, the sorts of people who actually might have Bitcoins. And with the price of the notoriously volatile cryptocurrency nearly double, in US dollar terms, what it was in early November, and more than 32 times what it was worth in January, it might be time to cash in. And there's an even better reason Chinese investors might want to consider selling. In late October, a Hong Kong-registered online Bitcoin trading platform abruptly disappeared, leaving 500 or so Chinese investors with a combined 30 million yuan, $4.8 million, in losses. Other estimates put losses for 130 people at 46 million yuan, link in Chinese. That site allowed users to bet on Bitcoin price movements by borrowing up to 10 times the amount they had deposited in order to speculate. This caused wild swings in its trading volume, link in Chinese, according to the IT Times, and the company faced a cash flow shortage in September. By the way, this wasn't the only Bitcoin platform that suddenly disappeared. A recent study from Southern Methodist University and Carnegie Mellon University found that 18 of 40 Bitcoin trading platforms created in the last 3 years shut down. Of those, 13 did so without warning. Portugal's first property sale in cryptocurrency might have looked unremarkable, but it didn't feel that way to those who had been working for nearly a year to make it happen. On May 4th, in an office in the northern city of Braga, two men pulled up chairs in front of Apple laptops. João Marcus, the seller, passed a crypto wallet address to the buyer, who made a transfer and became the new owner of an apartment in the city worth €110,000, just under 3 Bitcoin at the time. The president of the Portuguese Chamber of Notaries, Jorge Silva, watched on, as did Carlos Santos, chief technology officer at the Portuguese real estate company Zome, which brokered the sale. The whole process took just a few minutes, but it was the culmination of many months of discussions between Portuguese tax, financial, and notary authorities to agree on how to allow property transactions to happen entirely in cryptocurrency. Portugal, which does not have capital gains taxes for cryptocurrencies, has been a haven for crypto investors. In mid-April, Silva's office issued guidance on how notaries should approach crypto transactions without the need to convert to euros before becoming legal. Silva says the move reflects a clear desire on the part of buyers. Crypto is a reality, he says, and now you can do crypto sales in a legal way with transparency, complying with everything. Portugal is unusual in this respect. In most countries, the absence of resources to assess associated tax implications and risks, as well as the danger of money laundering, means conversion to fiat currency is still necessary at some point in the process. That uncertainty has not deterred companies such as Zome that have taken the plunge and are attempting to work out what a more established crypto real estate market would look like. Zome began scoping out the possibility of cryptocurrency transactions last summer, says Santos, who sees the potential to tap a new client base. If we provide crypto investors with a convenient way, in their language, to allow them to do real estate business in Portugal, then we will attract these guys to us. The pool of potential buyers is growing. There are now tens of thousands of Bitcoin network participants who hold the equivalent of more than $1 million in their digital wallets. And a survey of U.S. house buyers commissioned by Redfin in December last year found that 12% of first-time buyers plan to liquidate digital assets for a down payment, up from 5% in the third quarter of 2019. As trading in cryptocurrencies soared during the pandemic, some investors struck gold and found themselves with the funds to buy property for the first time. Those with established wealth also added crypto to their portfolios. The 2022 Knight Frank Wealth Report, a global survey of more than 600 wealth managers who manage portfolios for individuals worth over $30 million, found nearly 1 in 5 clients now invest in cryptocurrencies, tokens and coins. That reflected the peak of the market. This year, a crash in crypto prices brought on by rising interest rates has spooked investors and wiped around $2 trillion off the value of all cryptocurrencies. Yet enthusiasm for crypto property deals remains, and not just among buyers who are looking to convert their increasingly volatile assets into safer investments. Safe as houses. While some Web3 savvy investors have dabbled in buying virtual properties in the metaverse with their crypto funds, many would prefer their digital wealth to translate into their physical lives. Daniel Brown, a senior real estate associate at British legal firm Kingsley Napley, says he saw interest in buying the property with cryptocurrency build in the run-up to Bitcoin's peak last November. Now, after months of market turbulence, the argument for turning to safer assets is becoming harder to ignore, he says. People were looking at perhaps having an exit from something that is known to be volatile and then putting money into something a little bit more well-known. Say bricks and mortar.